Fukuoka Financial Group, also known as FFG, is one of Japan's major regional banking groups. In this video, we'll be doing an in-depth company profile of FFG, covering its history, stock performance, major events, strengths and weaknesses, and finally my investment outlook for the company. First off, let's take a look at the company background. So Fukuoka Financial Group was formed in April 2007 through the merger of Fukuoka Bank and Kumamoto Bank, both of which had been established in the late 19th century. The new entity was initially named FFG, reflecting the first two letters of Fukuoka and Fuji. Later on, in 2019, FFG acquired the 18th Bank, a regional bank based in Nagasaki, and in 2020, that merged with Shinwa Bank to create the 18th Shinwa Bank. All these mergers were strategic moves aimed at creating a stronger regional banking group with a broader customer base and expanded services. Today, FFG stands as one of the leading banking groups in Japan, primarily focusing its operations on the Kyushu region. As of March 2023, the bank has approximately 300 trillion yen in total assets, 130 billion yen in total capital, and ranks as the 8th largest regional bank in Japan. Moving on to the stock profile. Fukuoka Financial Group is listed on the Tokyo Stock Exchange under the code 8354. As of October 26, 2023, the current share price is around 4,356 JPY. Over the past year, the stock has seen a 52-week range of 2,917 to 4,642 JPY. In terms of valuation, the current PE ratio is about 11.1, which suggests that the stock is trading at a reasonable earnings multiple. Meanwhile, the PB ratio is around 0.85, which indicates that the market values the bank slightly below its book value. Additionally, FFG offers a dividend yield of around 3.1%, providing a stable income for long-term investors. Finally, the market cap of the company is around 830 billion yen. Next, let's talk about the key gains and losses of the company. Strengths-wise, one of the main strengths of Fukuoka Financial Group is its strong regional dominance within the Kyushu region of Japan. Despite being one of the smaller banking groups in the country, FFG has a significant presence in the local economy, having been established and grown within the region for many years. This strong regional dominance enables the bank to build deep relationships with its customers and have a thorough understanding of the local market. Another strength is its focus on mergers and acquisitions as a means to expand its business. Through strategic acquisitions, FFG has been able to broaden its product offerings, enhance its service capabilities, and increase its customer base. For example, the recent acquisition of 18th Bank allowed FFG to enter the Nagasaki market and offer a wider range of financial products to its customers. Consistency in dividend payout is another positive aspect of Fukuoka Financial Group. The bank has a history of paying out dividends to its shareholders, which demonstrates its commitment to rewarding investors and building shareholder value. However, it's important to note that the amount of dividends may fluctuate based on the bank's financial performance and future prospects. Moving on to the weaknesses and risks, one of the key challenges faced by Fukuoka Financial Group is its relatively low profitability compared to some of the larger banks in Japan. This could be attributed to various factors, such as increased competition and stricter regulations within the banking industry. Additionally, the bank's heavy reliance on the Japanese economy and interest rate trends makes it vulnerable to fluctuations in these factors. Furthermore, the risk of non-performing loans (NPLs) is an ongoing concern for FFG, as with any financial institution. NPLs occur when borrowers fail to make their loan repayments on time, which can result in financial losses for the bank. Finally, it's worth noting that the market's undervaluation of FFG could also indicate long-term structural challenges and limitations for the company. Next, let's discuss the major events and growth drivers for Fukuoka Financial Group. As we've touched upon earlier, several mergers and acquisitions have played a crucial role in the growth of FFG. The initial merger between Fukuoka Bank and Fukuoka Bank in 2007 laid the foundation for the company. Later, the strategic acquisitions of 18th Bank and Shinwa Bank helped expand its reach and customer base. Looking ahead, future growth for FFG might come from strategic partnerships with fintech companies, enabling the bank to offer innovative digital banking solutions to its customers. Moreover, further consolidation among Japan's regional banks could present opportunities for FFG to expand its market share and strengthen its position in the industry. Finally, any improvement in domestic economic growth and interest rate stability would likely benefit FFG, as with any financial institution. Finally, let us talk about the investment outlook and my way of thinking. When it comes to Fukuoka Financial Group, my overall assessment of FFG is that it is a solid regional bank with a decent dividend yield and a strong local presence. However, as a long-term investor, I see it as a slow-growth banking play. The bank's future performance will likely depend on Japan's economic recovery and interest rate policies, both of which are uncertain. While FFG has a history of paying out dividends, it's important to remember that these payments are not guaranteed and can change based on the company's financial results and future prospects. Given these factors, I believe that Fukuoka Financial Group could be a suitable investment for long-term investors seeking exposure to the Japanese banking sector and are looking for a stock with a relatively low price-to-book ratio. However, it's essential not to put all your capital in one regional bank due to the inherent risks involved in the industry. Instead, consider diversifying your investments across different sectors and asset classes to mitigate potential losses. Before making any investment decisions, it's crucial to conduct thorough research. Keep track of the company's quarterly earnings reports, monitor interest rate policies, and assess loan performance. Stay informed about the latest developments and consult with a financial advisor if needed. Thank you for watching. If you enjoyed the video, please give it a like and subscribe. Let me know in the comments if you have any questions. Stay tuned for more content. Thank you, and until next time.